Good afternoon. Good afternoon, everyone. I'm Baggett on at Stock Market Caddy, and today is Sunday, August 28th at about 4:15 in the afternoon. Received a lot of phone calls in the last few days. Seems to happen when the market turns down. Um, we welcome those calls. It's great, but it's sometimes better to learn, when the sunshine is out, right? You hate to be under the pressure or under the gun. And a lot of people are calling and certainly asking, and we thank you about what stock market is, stock market caddy, what it is, what it's about, but also too asking us, what do I see for the market? Are we going up? Are we going down? So let me share with you a perspective here on the market, right? If you are interested in Stock Market Caddy, who we are, what we're about, you're welcome to visit the website and explore. There's a lot there. You're also welcome to give me a call. I'm happy to talk with you about Stock Market Caddy, and for that matter, even a few minutes about the market. And if you want us to plug in the market you're most interested in, or the stock you're most interested in, on the interval you're most interested in, I'd be happy to do that. You're looking at a chart, a traditional chart of the SPY, the S&P 500, and this is a daily chart going back a year or so, thereabouts. Now, the way we trade day in, day out, whether we're trading futures or options or individual shares of stock, we are trading algorithmically. We are trading specific strategies, mechanically, robotically. Why? We want to remove the emotion that is associated with greed and fear so that we can make dispassionate, business-like decisions over and over again. But I realize many people have been accustomed to learning first about candle charts and moving averages and things of that sort. Are we schooled in that? Yes. Do we use them in ways that what you see on the internet? Probably not. And let me show you as an example. Looking back here at this point, this is what we call, in fact, I'm going to come back here. I'm going to identify what we call a true high and a false high and a true low and a false low. And then we will point to where we are today and ask you what you think. This little point right here, that little yellow point, that at that point, I'm putting my cursor right here. And if you notice, it goes up through a candle, up this one right there, right? Now that high, let's see if we can get the information. That high was 453.07. And we would say that that is a true high. But you'll notice in the next 2, 3, 4 days, it actually goes higher. Price traveled higher. And this little tool here did not travel as high. In fact, it went lower. This would have been telling us that we have a false high and the market is about to take a dumper. And down it went. Now, this is a true low. And same thing. My cursor is pointing right here, right? Try to get it right there, right in here, right? Oops. Right in here. That is the true low, that candle right here. We go lower. And this indicator, this tool did not. This was telling us that this was what? A false low. And it should be bought. Because why? We are likely to do what? Go higher. Over and over again. False lows, false highs. Now, I don't have the time in this short video, or I'm already 5 minutes in. And I'd love to be able to do this, right? We do this over and over again. We can even do this intraday to a certain extent. But we were cautioning our members back here and not that long ago that this was right here, that this candle right up in here was a true high. And we went higher, and it was a true high. So this was a high to be trusted. This was a high to be trusted. But then we went demonstrably higher, and we did not establish or stay the same. So that told us up here that this was what? What type of a high? A false high, and should be sold. And down we come. It isn't enough to simply say, just because we break through, you could say, oh, I know what you're doing there, Bagger. You break through, you sell. You break through, you buy. Well, if you did that, you'd probably be a lot better off. But that isn't enough. So we are now on our way down. Most definitely. Right? But the place to have got your options on, the place to have gotten your trades on was up in here. We are coming down. And we will most likely form what? A true low. A true low. And guess what? We may go lower. And we may establish another true low. And we may go lower. We will be waiting for a low. Ideally, a low that goes lower than the true low. And we get an arrangement like we got down in here. Because you can see this little spot right here was a true low. But we went lower. And yet we didn't go lower here on this indicator. This told us right here. And we said this from members, this is a false low. I know it's nerve-wracking. I know it looks ugly, but it should be bought. And buy it we did. Are we going to buy this tomorrow? No. Are we going to buy it Monday or Tuesday on a daily basis? No. I'm not. Nope. I will wait. I will wait for all the Johnny-come-latelys. Oh, it's just a dip. Oh, it's going to crash. Oh, it's this. All noise. All a distraction. All amateurs. I will wait for the true low to be established. I will wait for that true low to be tested and ideally fail and see that another true low is not established, giving me the divergence that I need to come in and to share with our members that we have established a false low and it's now time to buy. I'm Bagger Don at StockMarketCaddy.com. This is just one tool that we use. Just one. And most of our tools are algorithmic, mechanical, and robotic. And most we're using intraday. We get a lot of practice. Making market calls on a daily basis is relatively easy. You just need to be patient. The market needs time to set up. It doesn't make a move, a significant move or a change in direction every single day. Unfortunately, here in Florida, we're now entering hurricane season. They take time. You know, they will say we'll see the conditions of the storm, and they'll say in 5 days there's a 20% likelihood that it could be a hurricane. Or in 10 days, it's a 50% likelihood. At the moment, the likelihood that this becomes a market hurricane to the downside over the next 5 days is high. Well over 50%, folks. You don't want to be buying your hurricane insurance when the hurricane is knocking on your door. Those of you trading options, You don't buy your options when the market hurricane is coming ashore. Feel free to give me a call, 813-758-8263. I'm Bagadon. This is StockMarketCaddy.com.